When you're growing up, most of your money habits and beliefs come straight from your parents. And while not everyone is happy to hear this, for me personally, that's where the real trouble started. And if I didn't fix it, it would have kept me stuck for years, dreading my money and sabotaging my financial future for the rest of my life. But here's the thing, this could be happening to you too,
And it's really going to happen, isn't it?
and you might not even realize it. So give me a few minutes and I will show you the big problem that sabotages so many people from building wealth successfully. I will help you figure out if you're dealing with it, and most importantly, how to fix it. So let me start with a story about my dad. A story that shaped everything I thought and knew about money. My dad was a born entrepreneur, and at a young age, he built a business from scratch, poured his heart and soul into it, and eventually sold it for millions of dollars. And for a while, it felt like he cracked the code to financial freedom. But here's the truth, earning the money was only half of the battle. The harder part was figuring out how to manage it and make it grow. And like many entrepreneurs, my dad was ambitious. He didn't want to just save his money, he wanted it to work for him. And he kept on hearing about investing and how it could be the key to multiplying his wealth. But here is where things went wrong. He didn't know much about investing. And yes, he was smart and driven, but he had little to no experience about the complexities of investing in the stock market. Unfortunately, this lack of knowledge led him to make three critical mistakes. Number one, he didn't diversify and put too much money into a few individual stocks. Number two, he tried to time the market, attempting to buy low and sell high, often based on emotion and speculation. Number three, he followed media hype, chasing the hot stocks that everyone was talking about. And then the results were devastating. In a short period, he lost a significant portion of his wealth. The stress and fear that came with these losses has left a deep imprint on him, but also on our family. My dad's experience taught him one thing: investing is risky and scary. He warned me, my older sister, and my younger brother about the dangers of investing. You can better play it safe, my boy, like there's no other way. And while his intentions were good, the fear of losing money stuck with us in ways we didn't fully understand at that time. So let me explain what I mean by this. Looking back, I realized something profound about my dad's journey and about how most people approach money. The lesson wasn't just about avoiding his specific mistakes, it was about recognizing that how we behave around money, like traumas from the past, and how you feel about it, is far more important than what we know about investing. It plays an important part in your subconscious mind. This is also the core idea behind the book, The Psychology of Money. It's not about intelligence, tactical knowledge, or even the right strategies. It's about your mindset, emotions, and feelings, and the beliefs you carry from your past experiences. Because financial success isn't determined by market predictions or complex math, it's determined by your beliefs about money, the stories you tell yourself about what's possible, what's safe, and what's even risky. And therefore, one of the most striking moments where I saw these lessons in action happened recently during a conversation with my older sister and her husband, because both of them are financial professionals as certified public accountant. In fact, on paper they know everything about the numbers, but when it comes to investing, it's a different story. We were discussing their financial situation when my sister mentioned the large cash reserves they were keeping in a savings account. And I was surprised. Given their background, they both understand the incredible power of compound interest and how inflation erodes the value of cash over time. But they were hesitated to invest. And when I asked why, her response made perfect sense to me. It's what we learned from dad. And he has lost a lot of money, right? My dad's fear of investing had influenced her more than she realized. Even though she knew better, the emotional imprint of those early lessons was hard to take. For her, keeping money in the bank felt safe and secure, because he wouldn't feel like losing it. But it was actually costing her a lot of money. And this conversation with my sister was a reminder for me that financial knowledge alone isn't enough. Beliefs and emotions play a huge role in how we manage money. My sister and her husband were not acting rationally. They were acting or reacting out of fear from past experiences. And while my sister understood this concept intellectually, it took a real conversation to challenge the limiting beliefs she had from our past. It's a lesson that I've learned and I've seen played out time and time again in my work with clients, for example. Even the most financially intelligent people, like most entrepreneurs, still can struggle with investing because of fear or emotional baggage from their pasts. This is the reason why I like the book The Psychology of Money. It doesn't just teach you about investing, it helps you understand your own behavior and beliefs about money. And here are three powerful takeaways. Financial success isn't about how much you know, it's about how you act. Number two, time is your greatest asset when you invest the right way. Compound interest is the most powerful force in wealth building, but it requires time and consistency. Starting early and staying invested over the long term will almost always make your money. Number three, your relationship with money is unique. Everyone's financial decisions are shaped by personal experiences, trauma, and the conditions we grew up in. This could play a big part in your decisions about how you invest your money, and even if you invest your money. So, money is more than numbers in a bank account or some simple lines on a stock chart. It's a reflection of our values that we have learned and our fears that we have experienced. And here is where the shift can happen. So, what about you? Take some time for yourself to question yourself, like why I'm always doing like this or thinking like that. What kind of limited beliefs out of your past do you may have? Take some time to reflect and write things down. Because if there's one thing I've learned, it's this: the way you think and feel about money is just as important as the decisions you make with it. So, if you are ready to challenge your beliefs and build a healthier relationship with money, I highly recommend reading The Psychology of Money. And I have to put the link into the description. And if you would like to dive even deeper into timeless investment wisdom, check out this video where Jack Bogle shares his 26 lessons from his 68 years of experience in the financial industry. So let's grow smarter and wealthier together. See you in the next video.